Right folks, welcome back to the channel. Here we have our weekly forex outlooks for both GBPUSD and EURUSD. Okay, so just want to make clear that we have our last week of the Easter sale. So if you use the code Easter sale, you are entitled to 30% off all LiquidFX memberships. So that being said, let's get involved in the video. So what we have here is a daily time frame of GBPUSD. Actually, no, let's switch to the weekly. So the weekly time frame is an interesting time frame, right? So what we have over here currently, so I'm starting the chart completely naked. This is a completely naked chart. So what we have here is we have a swing high. This is our swing high up here. And we have a swing low all the way down here. So these are our two established points in the market. Now from here we understand once we've marked out our structure, the next thing we need to look at is the premium and discount arrays, or the PD arrays. And it's quite simple how we do this. We simply project the Fibonacci tool from the swing high down to the swing low. And from here we understand that we have two regions to work with, right? So we have anything above the 50% level becomes our premium, and anything below the 50% level becomes the discount. And so these are two very, very important things to establish in the markets, right? So now, once we've established our bearish structure, right? So we understand we've had a break of structure just over here. So we have a bearish structure over here. We have a premium and discount, premium above and discount below. And from here, the last thing we want to look at is we want to look at our fair value gaps, right? So inefficiencies and price, right? So if I quickly label the inefficiencies for people, this inefficiency, which I'll label in blue, dark blue, represents a fair value gap. Notice how this is a premium fair value gap above the 50% level. So this here is a premium fair value gap. And so because of that, we have our order block. Now, where's our order block? Now, this is going to be our order block. So it's the last candle prior to the imbalance, right? So this now becomes our order block. Order block I'm going to label in gray just so people can, so it's different from the fair value gap itself. So the fair value gap in the premium gives rise to the order block, right? So this is our order block or our weekly POI. So now from here, we've seen a reaction of this POI. We've seen price shift downwards. So we've seen that bearish reaction. And now from here, we need to understand price has given us a weak low to potentially target. So we've had bearish momentum. The last 2 weeks have been pretty bearish, and we have a weak low just over here in this region. So this currently is a weak low. Okay, this is a draw on liquidity because it's a weak low, and it's simply a weak low because it hasn't actually produced any new highs. It hasn't done anything significant, right? We've seen price try to drive up, but it's failed to do so, and now we're heading downwards towards the drawn liquidity, right? So if we have bearish activity in the markets, bearish momentum in the next few weeks, this will become our target, right? So this drawn liquidity is specifically at 1.2036, right? 1.2036. And so this is simply a drawn liquidity because it's a weak structural low. Let me just quickly label that. This is a weak structural low in the markets, right? We also have a draw of liquidity currently up here as well. This also is a draw on liquidity for the same exact reason, because so far we haven't seen it push down and get to this low, which is all the way down here, the all-time low, which is all the way down here. And so because of that, we have two draws on liquidity, a weak high and a weak low. But at the moment, if the bearishness continues, this draw on liquidity will be the next overall target, like I said previously, at 1.2036. So this is our current target for GBPUSD if the bearish momentum continues. So now if we head down to the daily time frame, the daily time frame paints a similar picture where what we have over here is we have price reacting off that weekly POI, and we saw a shift of market structure, right? So our current market structure is currently bearish. We had a swing high, low, and a high. Now this swing high produced a low all the way down here. And so because of that, our structural break you can map out as this. So this arrow represents the break of structure, right? BOS, or break of structure. Now that we've had our break of structure over here, it's important to understand, right, from a premium and discount array, from a PD array point of view, we've seen price head above this equilibrium point over here, right? So this is the EQ, or the equilibrium. So it simply represents the midpoint between this swing high and this swing low. So this is the equilibrium. So we need to understand and assess the fact that we've had a firm mitigation into this premium, right? So this here, which I'm going to highlight in yellow, this here represents a premium high. So we've had a premium, we've established a premium just over here. Because we've seen price retrace into a premium, it's safe to assume that we've had our correction. So because we were bearish anyway, we understand that a bearish market will go down, but we will see somewhat of a correction into a premium before heading lower again. And that's exactly what we've had over here. So this is our premium. So with this information, we need to understand, we need to use this information of structure, premium and discounts and fair value gaps to try and decipher where the markets are going to go next. And this is very important. This is a key skill in any market, whether it's forex, indices, crypto, or commodities. And we use the same overall concept. So what we have over here, I've marked out a daily POI, and the reason why this is a daily POI is because of two main reasons, right? We understand that it's in a firm discount, so that's the first reason, right? We understand it's in a firm discount. The second reason it becomes a POI is because we have a fair value gap also, and we understand that when we have a fair value gap, it represents an inefficiency in price. So this here is the current inefficiency, which I'm going to label again in blue. This here is a fair value gap in price, and so because of that, we understand that the markets will rebalance inefficiencies at some point. So my overall target is for price to get down to at least this POI over here, and this POI stands at 1.224, right? So those who are interested in some higher time frame sort of signals over the next weeks or days, even going into next week, this is currently where we're looking at 1.224. This is the overall level I think GBPUSD is going to get to next, right? I think price is going to get down to this level over here. Now, once we get to this POI, it's quite reasonable to expect somewhat of a reaction, right? Because this is a firmly discounted low. We have a firmly discounted POI that's left a significant fair value gap over here, marked out in blue. And so because of that, I do expect price to bounce off this level at some point in the future. But until then, the bears are going to be in control as we get down to this level. So if we quickly go down to one more time frame, the 4-hour time frame, we can begin to dissect where I think the markets are going to go over here. So what we've had over here is we had price give us that premium, right? That premium high, the daily premium high. So since then, what we've had, if we look to the left, is that we've had a break of structure over here. We've had a break of structure, right? And as it stands, we haven't had any particular signs of price giving any sort of correction. If we were to have a correction, right, we would see price do something like this before heading lower. But if you look at the candles, right, if we read price action carefully, right, we understand we have huge impulsive moves to the downside. So we understand we have bearish inefficiency over here, right, that hadn't actually been filled. So we've had a bearish impulse that hasn't actually been fully corrected. We had another bearish impulse over here which hasn't been corrected. We had another bearish impulse over here that hasn't been corrected. And to end the week, we had another bearish impulse over here that hasn't been corrected. And so because of that, it's safe to assume, or it's quite safe to assume in your analysis, your higher time frame analysis, that we could indeed see price get down to here in the next few weeks, right? However long it takes, I think it may take 1 or 2 weeks, but ultimately this daily POI becomes our target. So I am overall bearish on GBPUSD unless price wants to get down to this level before giving somewhat of a H4 correction before ultimately getting down here. But this POI is the ultimate target on GBPUSD. Let me quickly write down the price of this. I have this currently at 1.224. So let me just write this down for everyone, right? 1.224 is where I think this particular market is going to head to next. Now, we do exactly the same thing, but this time on EURUSD, right? So let's go to EURUSD. The beauty with EURUSD is that it's quite similar to GBPUSD in the sense that we can analyze it in exactly the same way. So if I start on the weekly time frame for EURUSD, again we have our bearish structure over here. So we saw a clear shift of structure. So this low over here produced a high, and this high broke the last low. So we are bearish in terms of our structure. If we look at our dealing ranges, we need to understand in terms of our dealing ranges that we have a premium up here. Ooh. And we have a discount down here. So we have a premium and a discount, just like this, right? So from here, we need to understand again, we've seen price give us a firm premium above the 50% level. So we've seen price correct all the way up to a firm premium, miss the fair value gap over here, which is fine. And since then, we've had impulsive moves to the downside, impulsive moves to the downside. So from here again, it's very similar to GBPUSD. In fact, it's the same, where we have a daily POI that's in the discount. So this here is a daily POI. And so this daily POI is a valid target to us. It is a point of interest simply because it's in the discount and it leaves a fair value gap in price. So these are the two things that distinguish it and make it a point of interest. This is why we're interested for these reasons. And so this current POI stands at 1.058, right? 1.058. This is the reason why I think price is going to get down to this level at some point, because it's a discounted zone that leaves a fair value gap. Again, the fair value gap, just to bring to people's attention, is just over here. This is the fair value gap over here. So if we now quickly notch down one more time frame, just to conclude the video, the 4-hour time frame paints a similar picture to that of the daily time frame, okay? Where we are below a H4, we are below a 4-hour low, so we've had a break of structure. This last low has been broken officially over here. And so because of this, we've seen a slowdown in price. So when we're below an old low, I need to make this clear to people. When we're below an old low in this region, right, there's two things. We can either just continue lower. This then becomes a redistribution. We can either redistribute and head lower. So this is a redistribution. I'm going to label in red. We can either have a redistribution, or we understand just from basic market structure, once we're below an old low, we can accumulate higher, reach somewhat of a premium, and then continue lower, right? So we're in a zone right now. GBPUSD indicates that price will just head lower, but EURUSD has shown some slowing down, right? We understand we have some slowing down over here. So if I label this in green, the green represents either an accumulation, beg your pardon, an accumulation up to a more premium level, or we could simply see a distribution down to this daily and refined 4-hour POI. Ultimately, if the bears continue to, show its strength, then ultimately we do expect to get down to this region over here. Again, bearish on EURUSD as well.